Euro to US dollar is pumping into the Fed minutes, but watch this trap at 1.1430. The 1-hour chart says strong buy. The daily chart says sell. That's a perfect bull trap. The herd is chasing green candles right into a wall of resistance. I'm revealing 2 scalp plays and 1 swing short before the rug pull. There is 1 danger zone and 1 hidden opportunity right now. I'll show you both. Open your Euro to US dollar chart. Mark 1.1430. Most traders look at the pop and think breakout. They are about to get liquidated. The real money is already fading this move. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today, with exact stops and targets. Right now, the session bias is a counter-trend fade. The 1-hour chart is screaming strong buy, but the daily trend is a solid sell, the weekly is a strong sell, and the monthly trend is also selling. This is not a regime shift. It's a dead cat bounce into a monster resistance cluster. The single invalidation level that flips everything is 1.1465. Write this number down. If Euro to US dollar closes a 4-hour candle above 1.1465, the entire bearish structure resets and we pivot to a genuine breakout chase. Until then, this is a trap. And the herd is fully positioned long, piling into the 1-hour momentum. That's the fuel. When everyone is leaning the same way ahead of the Fed minutes, the market hunt stops. You know that. Let's walk the charts from the top down because the multi-time frame alignment is screaming one thing: fade the rip. On the weekly, price is trading well below the 200-week moving average near 1.1550. The 20-week MA at 1.1050 has crossed below the 60-week MA at 1.1250, a bearish widowmaker pattern that signals institutional distribution. Every weekly rally this quarter has been sold into, and this week is no different. The weekly MACD histogram is still printing deeper red bars, no divergence. That's persistent momentum to the downside. Drop down to the daily. Price at 1.1427 is sitting right underneath the 20-day moving average at 1.1454, the 60-day at 1.1510, and the 200-day at 1.1564. That's a waterfall of resistance above. Price is below every single major daily moving average. This is a clear bearish market structure. The daily MACD is negative, at minus 0.005, and the RSI is only 42.6, nowhere near oversold. There's plenty of room to fall. ADX is 43.5, a strong trending environment. The trend is not your friend right now if you're buying. It's your executioner if you're late. Now the 4-hour chart. It's where the hidden tension lives. Price has just bounced from the 1.1385 support area, but it's bumping against the 4-hour 20 MA at 1.1435, which aligns exactly with our R1 resistance of 1.1433. The 4-hour 60 MA is at 1.1460, right near our invalidation level. The 4-hour MACD is trying to curl up, but it's still below the zero line. This is a bear market bounce, not a trend reversal. And here's what most traders miss. The 4-hour chart is printing a massive bearish divergence on the RSI if we compare the last low to this current price pop. Price is making a higher high on the 1 hour, but the 4-hour RSI is making a lower high. That's a trap. That's the signal the smart money is waiting for. Now drill down to the 60-minute chart where the retail crowd is excited. The 1-hour trend is strong buy. Price has crossed above the 60-hour MA at 1.1410 and the 20-hour MA at 1.1420. The MACD is positive, and stochastics are at 61, not yet overbought. But, and this is the kill shot, the 1-hour 200 MA sits at 1.1450, almost exactly on the daily 20 MA. That's a brick wall of resistance layered from 1.1433 up to 1.1454. The 1-hour momentum is simply driving price directly into the zone where the higher timeframe sellers are reloading. This is not a breakout you want to chase. It's a liquidity grab in progress. The pivot point today is 1.1417. Price is currently above it, which gives the illusion of strength. But the S1 is 1.1385, S2 1.1369, S3 1.1337. Resistance layers. R1 1.1433, R2 1.1465, R3 1.1481. With an ATR of 58 pips, the daily range potential fully covers a run from 1.1430 down to 1.1370. That's exactly the move I'm positioning for. The CCI is flat at 1.89, showing no true momentum, just chop. Williams percent are at -36, not extreme. The price action is setting up a textbook fakeout. The fundamental driver seals the narrative. The core 24-hour news is that euro to US dollar rose ahead of the Fed minutes, but the question on every desk is, can it last? The answer is probably no. Why? Because the 2-year yield spread between the US and Germany is widening again in the dollar's favor. The market is quietly repricing a more hawkish Fed after the latest PMI data. Tonight's FOMC minutes are likely to reveal discussions about holding rates higher for longer, and that would be euro negative. The ECB, on the other hand, is inching toward a pause with a weakening growth outlook. That policy divergence is a dollar-killer narrative turned on its head. It's actually killing the euro right now. And don't forget, equity futures are under pressure, oil is bid on geopolitical risk, and that risk-off tone lifts the safe haven dollar. So this pop in euro to US dollar is purely technical and purely short-lived. The 1 to 2 week directional lean remains firmly bearish. The only event that invalidates that lean is a daily close above 1.1564, the 200-day MA. If that happens, I'll flip bullish instantly. Until then, sell rallies.do. You think the dollar breaks 105 this week? Comment yes or no. I'm tracking consensus right now, because the DXY is knocking on the door and a clean break above 105 would accelerate euro to US dollar toward 1.1300 in hours. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to lay out 3 trades, with levels so precise you can set alerts and walk away. Strategy 1, the opening scalp. This is a fast snipe, a high probability long from a deep pullback for those who want to surf the last gasp of this 1-hour momentum before the reversal. Here's the setup. Price needs to dip into the pivot and the 1-hour 60 MA area, a confluence at 1.1415 to 1.1400. The exact trigger is a 5-minute bullish engulfing candle that closes back above 1.1415 after tapping 1.1400. That shows rejection. Entry on the next candle at 1.1418 with a tight stop loss at 1.1398. Just below the session low and S1. That's 20 pips of risk. Take profit 1 is 1.1433. A quick 15 pips at roughly 1 minute and 0.75 seconds are initially, but we are trading the speed. If momentum holds, a partial TP2 at 1.1450, right at the brick wall. If a 5-minute candle closes below 1.1400, the scalp is void. Do not chase the opening SCLP entry, 1.1418, 5M bullish engulfing after 1.1400 tap, stop loss, 1.1398 take profit 1, 1.1433 take profit 2, 1.1450 risk, reward, ~1:1.6R to TP2 invalidation, void if 5M close below 1.1400 strategy 2. The liquidity grab. This is the counternoise trade. My favorite setup for today. It exploits the stop hunt above 1.1430. Here's the play. The market pushes above R1 at 1.1433, triggers retail by stops and breakout traders, spikes maybe to 1.1445, then violently reverses. The entry is after that fake breakout prints a 15-minute bearish engulfing or a pin bar that closes back below 1.1430. So condition. A 15-minute candle wicks above 1.1433 and then closes below 1.1428. Enter short at the break of that candle's low, roughly 1.1425. Stop loss above the wick, place it at 1.1450 exactly. Tight, 25 pips risk. Target the nearest intraday liquidity pool, which is the pivot at 1.1417 for a quick 8 pip scalp. But we can stretch to S1 at 1.1385 for a larger 40 pip gain if momentum is sharp. This requires fast execution. If the reversal doesn't happen within two 15-minute candles, exit. Warning: if price just cleanly breaks and holds above 1.1440, the trap fails, and we stand aside the liquidity GROB entry, 1.1425, after 15 minutes close below 1.1430, following a wick above 1.1433, stop loss, 1.1450 take profit 1, 1.1417 take profit 2, 1.1385 risk, reward, 1:1.6R to TP2 invalidation. Void if no reversal within two 15M candles or close above 1.1440. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing. This is the trend alignment trade for the bears who want to hold through the Fed minutes fallout. The swing entry triggers on a 4-hour close below the daily support S1 at 1.1385. That's the line in the sand. Once the 4-hour candle locks below 1.1385, the structure turns impulsive to the downside. Enter short on the next candle open near 1.1380 with a stop loss placed above the daily structure at 1.1465. Outside today's at 2 and the 4-hour 60 MA. That's 85 pips of risk, but it's a swing, so size accordingly. Take profit 1 conservative target is S3 at 1.1337, a 43 pip move. Take profit 2 stretch target is the psychological 1.1300 handle, a 80 pip gain. Risk or reward is roughly 1 minute and 0.9 seconds to TP2, but with swing trades, probability and trend alignment matter more. Once price reaches halfway to TP1, around 1.1358, move the stop to break even. The invalidation that ends the medium-term bearish view is a daily closeback above 1.1564, the 200-day MA. This swing is based on the weekly strong sell and daily sell structure. It's not a scalp, it's a position that could run into next week to the session SRNG entry, 1.1380, on 4H close below 1.1385, stop loss, 1.1465 take profit 1, 1.1337 take profit 2, 1.1300 risk, reward, ~1:0.9 R to TP2, trend probability edge, invalidation. Void if daily close above 1.1564. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. No positions through high-impact news. And the Fed minutes are exactly that. Stops are non-negotiable. This is how you survive to trade the next big move. Let me bring it all together. The single most critical level for the next session is 1.1430. It's the trapdoor. If price rejects that zone and slams below 1.1385, the swing activates and we are targeting 1.1337 and then 1.1300. Tomorrow's focus will be the aftermath of the FONC minutes and the Asian reaction. If 1.1385 breaks, the whole monthly bear flag triggers, and I'll have the updated blueprint 24 hours from now. That video will map the next 150 pip leg. If you want the full breakdown on Bitcoin and the S&P 500 divergence, that video is live now. Tap the end screen. The liquidity tide in equities is shifting, and it's spilling into FX. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. I'll see you on the next one. Scalp the noise. Swing the trend.